What's going on, everybody? Welcome back to the channel. I appreciate you stopping by, spending a few minutes of your time here with me today. First off, Merry Christmas, Happy Holidays. I hope you enjoyed some much needed time away from your charts, maybe with your family, your friends, your loved ones, all that good stuff. We've got a new year rapidly approaching, right? And I've got high hopes for 2025. This new year is going to be good for all of us here on the channel, all right? Now, I've basically stepped away from the charts until the new year, and I just want to take this time to sort of reiterate on some certain basic concepts and how to apply these basic concepts in accordance with, our overall trading system. Now, we know there's only three things that the market does. The market either breaks out, pulls back, continues, or we'll have a breakout, pullback, reversal, or a breakout, pullback, and then we'll enter a trading range, okay? These are the three basic things that the market does, all right? And here on the chart, we're looking at a breakout, pullback, continuation sort of template, all right? And what I'm trying to show you here, right, is that we have here our breakout, our pullback, and our continuation. That continuation is another breakout, okay? We break out of this high, so we break out, then we pull back, and then continue again. There's our next breakout of the high. That's a break in structure, right, to the upside. Then we pull back and then continue again. Now, when we pull back, okay, a lot of the times, not every time, all right, but a lot of the times, price pulls back to sort of the origin point of the breakout, of that initial breakout. So when we get this move right here, that move broke out of this high, and somewhere down here, this is the origin of this breakout. And so when we pull back into that area that was responsible for the breakout, okay, and then continue from there. A lot of the times, not every single time. And then I just put this on here to show you, right, when we have that pullback and we get ready for the continuation on a smaller time frame, right? This is real clean, but on a smaller time frame, it would look like this. Your pullback would be sort of a downtrend on a small time frame that reverses and then starts trading up and has like a miniature uptrend or whatever going on. And uptrend meaning higher high, higher low, higher high, higher low sort of price action. All right. Now, if we were trading this sort of thing and we were keeping this basic information in mind, but at the same time, we're also hunting 3-day setups and using Stacy Burke's overall system to guide us in our trading, okay? Here we have an entire week, all right? And we're still looking at breakout, pullback, continuation. So here's Friday, okay? On Monday, we break Friday's high, all right? So Monday has broken out. That's our breakout, okay? So now, if this market's going to continue up, we would be expecting or waiting for a pullback, then a continuation trade, right? And so you can see, here's that breakout. Let's actually get a little closer. The breakout here at this dotted line, okay? And this is the low. This is the origin point of that breakout. This push right here is ultimately responsible for that breakout, in another way of saying that, right? Okay, then we have Tuesday. Tuesday trades as an inside day, all right? So Tuesday doesn't break Monday's high. It doesn't break Monday's low. It stays inside of that high and low range from Monday. That inside day, according to Stacy, is a trigger day. Okay? A trigger day is a signal day that alerts us to a potential trading opportunity the next or the following day. On Wednesday, we break the low of Tuesday, that inside day, okay, and then reverse and trade higher. And that Wednesday London session, okay, remember peak formations, a large majority of the time will be put in place in a session opening window, okay? And if you don't know what peak formations are, the peak formations are the peaks either to the upside or to the downside that sort of put in the low of the day or the low of the week. Those are peak formations, okay? So this peak formation, going into New York, we'll say, and Monday, that breaks out of that high. Now on Wednesday in the London session, where do we find ourselves? We're back down. We pulled back to the origin point of this breakout, but it doesn't happen immediately, right? We don't just go up, then pull back, and then continue. We don't have the pullback continue on Tuesday, the next day, right? It's not going to be that easy. Sometimes it'll be 3 days or whatever that this entire thing plays out, or it takes 2 days for the pullback, basically, right? But then on Wednesday in the London session, we're back down here at near Monday's low at the origin of that breakout. Okay, and we will have some sort of inverse head and shoulders engulfment candle down here or whatever, showing us that reversal. Okay, now if we look at a breakout pullback reversal, the price action should obviously be a little bit different, right, than our Monday, Tuesday, Wednesday breakout pullback continuation trade. All right, so on Wednesday, we broke out of Monday's high, right? Closed in breakout to the upside, right? And then on Thursday, we get another inside day, okay? And that inside day keeps price up near this high of the week level, right? We get that inside day. There in New York, we start trading a little higher. Going into the next day, Asia trades higher, London starts to trade higher, gets back up to the high of the week level, consolidates for 30 minutes to an hour in London, and then the market rolls over, heading into the end of London, beginning of New York, okay, for the breakout, pullback, reversal trade, all right? And so you can see the difference. This inside day sort of is slanted down, and then we continue to work back down into this low. Remember what Stacy always says, are we working the high or are we working the low? Well, when we get to Wednesday down here in the London session, we are working back into this low of the week on Monday, okay, for that continuation trade. But it's different over here. We have Wednesday that broke out of Monday's high. Then when we pull back on Thursday, we stop, right here, go this way. When we get to the London session on Friday, where are we? We're back up into that high that was put in place on Wednesday. So we are working the high, right? Are we working the high or working the low? If we were working the low, we would be back down here, working into Wednesday's low for a continuation trade when we get to the session, right? But instead, we're back up high, working into that high from Wednesday, and then the market rolls over, all right? So that's sort of how this is going to look or play out or whatever. And this is a sort of a common thing with the inside day. You can see how on Wednesday, how I drew this, we break the inside day on Tuesday to the downside before trading to the upside. Okay, then on Thursday, we have that inside day. Friday breaks the high of that inside day on Thursday before trading to the downside. That happens, a lot of the times, and for example, me, if I'm trading the New York session, even though we have all of these potentials here, this Friday maybe was the only day when I had a good 90-10 trade opportunity, this low-hanging fruit going into New York, right? But if I'm searching through a basket of instruments, let's say this is, the euro dollar, okay? But if I am also looking at the euro or the dollar yen, and I'm also looking at the DJ30 and US oil and gold, Bitcoin, you know what I'm saying? I might have different opportunities in the New York session on different days, which is why we have a basket of instruments, okay? But I just wanted to show this to you as very basic information, this, breakout, pullback, continuation template. This is very basic stuff. You'll find this on almost every trading YouTube channel out there that talks about market structure and all of that. You'll see this out there. This is very basic stuff, and you can implement this very basic stuff into Stacy's system just like this, just like we did here. And you can see we didn't use any day counts, day 1, day 2, day 3, besides the weekly day count. Monday is day 1, Tuesday's day 2, and Wednesday is day 3 on the front side. Wednesday is day 1, Thursday's day 2, and Friday's day 3 on the back side of the week. So if we only looked at Wednesday and Friday, I might have had one trade on this market, all right? But we're using inside days as trigger days. That could be your setup. You could only look for inside days and look for the trade the next day if it lines up with a higher time frame analysis like this. Now, another thing that I wanted to sort of talk to you about, because some people were asking, I got a couple questions about this privately, talking to people, but we were talking about higher time frame biases and, your higher time frame idea of where we're going. So if you are using Stacy's system, right, and we're keeping track of the high and low of the day and the week, right? Because think about it. Daily time frame traders, weekly time frame traders, they are trading, meaning they are using the daily time frame candlesticks and the weekly candles to place their trades, okay? They're trading the breaks of daily candles or the breaks of weekly candles, okay? So by us being on the 15-minute time frame and keeping track of the previous week's high and low or the previous day's high and low, we're keeping track of those daily and weekly candle levels and breaks, but we don't have to go up any higher than that. We don't have to look at our daily charts to do that, unless you just prefer that looks better to you, it feels better on your eyes or whatever it is. But you don't really have to go up in time frames, because we are day traders. We don't really give a damn what price is going to be doing 3 months from now or 3 weeks or a month from now. You know what I mean? We need to be right in a very sort of short-term scheme of things, all right? So we don't really have to zoom out to those high time frames. We are using those high time frames still on a smaller time frame, if that makes any sense, right? But anyway, man, I appreciate all of y'all that's joined the Discord server so far. I'm excited to, see how this goes, figure out how to use Discord, you know what I mean? But until next time, man, I hope you continue to free your mind.